Prateek Agrawal, Chief Investment Officer at ASK Investment Managers. He's joining us right now on the phone line. Prateek, thanks very much for taking out the time. Incessant selling, moving us into the bear market for as of today's session. The lows was as of the bear market lows. But this panic, is it warranted, Prateek?
Yeah, good morning. To some extent, there is coordinated downtake that we are seeing across the board. Now, is there actual selling taking place? Well, the markets opened down. So between yesterday's close and today's open, there was no selling that happened. It is sentiment. It is people looking over their shoulders and deciding to start the market significantly lower. As far as the economy is concerned, what gets impacted is, yes, services like travel, tourism, airlines, hotels, but that is a small part of the economy. To the extent that maybe software guys are unable to travel to transition business, any which ways they now have people stationed at various countries where they seek business, so that doesn't get impacted. But if you are wanting to transition business, offshoring, etc., may get impacted a tad. So that's a marginal impact. There may be deferment of budgets. Once again, I would say in the whole scheme of things, marginal. Agri and agri-related does not get impacted. Government doesn't get impacted. If you take the consumption side of GDP, as a country, we benefit strongly from reduction in oil prices. So overall loss on account of the downtick in global economy because of the virus issue, etc. As of now, I would say balances. Big benefit on account of oil reduction. And actually, if trade reduces, imports reduce, we are a net importing country. Actually, domestic manufacturing gets some more leeway. They get some more market access in our malls, versus a very large percentage of imported products. Maybe we will find more of domestic products. So in some manner, it could be positive. But that said, there is a slowdown in the country, and that is real. We were discussing in the morning that newspapers are reporting stock of Euro 4 vehicles still there. So the Euro 6 would be more expensive. If Euro 4s are not selling, then probability of Euro 6 selling quickly is lesser. So we should recognize that there is some amount of slowdown in the economy, and maybe it will persist for some time and behave accordingly.
So, Prateek, in light of that, obviously, this throws a spanner in the works of any sort of recovery anytime soon, even from an earnings standpoint. While you have some of these companies insulated, some, export-oriented companies, rupee is now closing into record lows. Do you feel then one should take, refuge in some of these names that are, value buys and have some tailwinds to support them?
Yeah. So for too long, we have looked at sales growth as the only engine for EPS growth. I think we have been glued on to margin expansion as the key engine for EPS growth for quite some time, and that continues to be the story now. So if commodity prices are down and everything is down, it's not only crude, so all energy is down. Even some of the food prices are down. Vegetable oil could be down, and so on. Anybody who is using these as inputs should be reporting meaningful margin increases, gross margin increases. That's a manner of looking at stock just now. So people with pricing power being able to hold on to their prices would report margin-led EPS growth. Nobody will report a volume-led EPS growth. So expect 3, 4, 5% kind of volume improvements. But if there is 0.5%, 1% margin increase, it can make EPS go up in double digits, maybe even mid-teens. Similarly, in financials, globally, you are looking at interest rates getting lowered, liquidity getting enhanced. If you look at the bond markets in the country, people are expecting a big cut from the central banks. And then on the flip side, if there are businesses who are able to lend at fixed rates, and that happens to, spaces like auto, second-hand vehicles, gold, personal loans, etc. There one should expect to see some NIM increases. Once again, margin-led increases. And the smaller the ticket is, less would be the impact on that part of the market versus larger discretionary spends. So that is the part of the market we believe should be seen as defensive. That's the part of the market which has seen earnings grow any which ways over the past 3 quarters, and I guess that's the part where we have seen sizable valuation correction take place versus the broad market.
Prateek, good morning. Neeraj here. Is there a possibility of a second order effect coming into consumption? Inbound tourism is off now for the next 1 month at least, maybe longer, we don't know that. But that consumption plus the fact that if indeed there's a multiplier effect on people which dependent on these jobs, then maybe that, if not the quantum of consumption, then the ticket size of the consumption and the lower ticket spend could all come in, and would that disrupt that volume stroke price point growth for the next 1 month at least?
No, so inflation is out. Nobody is even thinking of raising prices. But the good thing is, even if you are able to maintain prices of your soap, shampoo, food products.
Prateek, sorry. I was asking if you believe that, all this while we've been talking about up trading, do you reckon consumers would down trade because they may not be able to consume less soap, but they might want to go in for a lower price soap because the tourism, inbound tourism, and the resultant impact that it has on a number of spaces would have some bearing, right?
Yeah, agreed. So to some extent that would happen. It's already being witnessed. It will be seen more. That should be expected, yes.
Okay. Prateek, the next thing is, I know that almost everybody would say, and probably you would advocate this in your buying activities as well, that these are the best times to buy. Fear is when you buy it, when the best time to buy. But I heard you mention in your opening answer to Devina that we have to take cognizance of the fact that there is a slowing economy and the globe is in play as well right now. Would you reckon that tactically we could get buying opportunities at lower levels as well?
So you have to decide for the moment. For our part of the market, we do believe the current levels are good. We have been building our portfolios, but if the scare on virus increases rather than getting addressed, we could be presented with better buying opportunities. So that's a possibility one should not rule out.
And that's actually what's been happening, because now it's getting more real on domestic shores with the number of cases here in India itself increasing, and that could feed into this panic further, Prateek. So in light of that, your advice is that to probably, if this gets worse off, then the buying levels will become better?
That's a rational expectation. If people are fearful, they go out less, purchase less, economy also slows a bit. Obviously, like it has happened today, without any trade between yesterday night and today morning, you got a big cut on the market. You could be presented with a better opportunity. That can always happen. And hence the whole idea in such times is to stagger a bit of buying. and buy the best, which you know will come back as soon as things improve. Now here, I would want to say that in a situation where liquidity has been increased globally and made available at cheaper rates, while the economic recovery may take time, that will be gradual, but the market recovery can be very fast.
Are you expecting the RBI to do anything, Prateek?
Yes, so bond markets already indicate that SBI has cut savings bank rate by 25 bps. That's a big positive move actually. That's a good indication. We do expect some rate cuts in the by central bank as well. 25 bps should be very high probability. 50 bps could be possibility.
Prateek, final question from mine at least. We've spoken a lot about the domestic factor. Just wondering, how do you juxtapose the global fear that we have? I mean, Merkel going out and saying that 60-70% of the German population might get impacted. It's truly front and center for the US geography as well, the number of cases expanding. So while China is contained, and you can look that as a playbook, but China is a different animal, right? People can get quarantined for a month and not raise a voice. It's different in the other countries. What do you reckon the global situation could do to sentiment and flows and thereby levels?
Yeah, so we initially got impacted not because we got any virus impact, more because of global flows. So China is a big part of the emerging market basket. That country got impacted. Obviously, investors took out money from EMs. The vehicles sold across its exposures, and India also saw selling. Now, it reverses now. So China is contained. They are coming back up. And if that thesis is correct, then the EM vehicles should no longer see outflows. It should stabilize, and which then means that over next few days one should expect to see less selling from foreign institutional investors. Okay, domestically, February numbers came in yesterday. They were good, strong, over 10k crores for equities. So there is money that needs to be deployed with funds. We know we continue to get strong inflows. So, kind of good support from domestics, which is happening. As soon as, foreigners stop selling, because China is at least stabilizing, and that's the biggest part of EM basket, we could see a bump up in India as well in valuations again.
Well, let's hope for that. A bump up in valuations would be very, very welcome. But Prateek Agrawal, thank you so much for agreeing to talk to us today on such a short notice. Really appreciate your time today.
Thank you.
That's the Chief Investment Officer of ASK Investment Managers, the largest portfolio manager in the country, talking about his thoughts.